Newmont down over 6%. That's basically a mini crash for a senior producer. What's going on? What's up with the earnings that they just reported? And what does the chart tell us? Let's talk about it now. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Well, that's the scene you don't see every day, and I don't mean my ugly face. I mean one of the biggest senior producers of gold in the world, down 6% today after yesterday's earnings report, after the market closed. We talked about it 2 days ago, remember? We talked about the chart. We talked about, as you can see here, hey, this uptrend, it's broken but not confirmed yet. Wait for it and wait for the confirmation. That's coming today. So, wow. Okay, one step after another. Well, help me, deep breathing here. First things first, if you haven't subscribed to the channel, hit the subscribe button so you don't miss information before it happens, right? We talked about Newmont before the numbers. That's when we need the information. We don't need the information now. Now we're just talking about what has happened, and we're going to look in the future, but we kind of needed to analyze the situation before it happened. And I told you before, I was very cautious. I expected good numbers, and let's be frank about it, the numbers are way better than I anticipated them to be. They're outstanding numbers. Now, if you say, well, why is the stock down 6%? And this is where things get really interesting. So, first things first. Let's talk about the actual numbers for the past quarter. Excellent numbers, right? The estimates for the earnings were 1.42 to 1.45 US dollars per share. They reported 1.71 US dollars per share. Outstanding. Record cash flow of 1.6 billion US dollars. That's just a tiny bit more than I make in a week. They retired $2 billion of debt. Now they have almost zero debt. Excellent. They follow through on their strategy to divest from smaller projects. That was one of the big management mistakes in the past, and focus on tier 1 projects. They'll run into problems with this strategy in the future, but for the near-term future, that's not an issue. So if all this is great, why is the stock down 6%? Well, it always comes down to the outlook, right? The stock market doesn't care about the past, they only care about the future. So the outlook, not great. And this is, I looked at the numbers for the past quarter, I'm like, man, that is really good, especially for Newmont. As you know, I'm not a big fan of Newmont. Then I look at the outlook and I'm like, yeah, that sounds and looks exactly like the Newmont that I know, right? So they guided for lower gold production in 2026 because of normal sequencing in their bigger mine projects. That's normal, right? You transition to new gold deposits. But also, and this is the big one, and this has always been one of the core problems of this company, they talked about challenges to maintain the costs, especially inflation costs of labor, which again, okay, but everybody's dealing with that, and that shouldn't be a problem when the gold price is going to the moon. But Newmont always had these problems. It's just not a great managed company. And let me show you two charts to give you the reason why I am not a Newmont fan, why I'm not invested in Newmont and won't invest in Newmont. Though obviously things change from past history to today, so does the management. Maybe it's better now than it was in the past, we'll see. But let's take a look at this. So this is the Newmont chart, and I'm going to the yearly chart, okay? So each bar is 1 year. And as you can see, we hit the peak in 1987, and we just broke out to a new all-time high in 2025, right? I mean, I don't really count this candle, but if you want to, okay, so it's 2022 and then 2025. That's ridiculous. That's absolutely ridiculous. Let's measure this from the all-time high in 87. So you bought at the peak in 87, theoretically, right? To the peak that we made this year. You made 20% in basically 40 years with the Newmont stock. And look at all the tears, right? The amount of money you had to spend on tissues, right? Crying yourself to sleep down here when the stock was down here. That's probably way more than you would have made with the 20% on Newmont. Now, to be fair, this does not include the dividends, right? So let's be very, very gracious and say that through 40 years, the dividends, you made so much money on the dividends that you basically doubled the amount of money that you put into Newmont in 1987. It's not even 97, 87, right? Man, that's still a terrible investment. But you doubled your money. Now let's compare this to the gold price. Here's gold, 1987 to the all-time high this year. You almost 10x'd your money. So if you bought Newmont, you maybe doubled your money. If you just had bought gold, you would have 10x'd your money. I mean, that is just an absolutely ridiculous underperformance by Newmont. And this is the reason why in just two charts, I show you why I don't invest in Newmont. Now, Barrick also has its problems, right? This happens to a lot of these really big companies. Once they get too big in the commodity sectors, the cost overhang with developing new projects, finding new projects, it becomes really cost intensive, and it becomes really difficult to control the costs. That's why I prefer the juniors over the seniors. Now, let's look at the chart. Chart doesn't look great. Okay, so we bounced off the 50-day, the purple line today. That's nice, but we basically confirmed the break of the uptrend that has been in place since July. Do I need to buy this stock looking at this chart? Absolutely not. Let's take a look at the weekly, because when in doubt, zoom out and see what that brings us. And yeah, that just looks just as bad, right, on the weekly. Now, obviously, next week would be the confirmation candle for this nasty breakdown that you see here on Newmont in this week. On the close, yeah, we didn't close completely at the low, but that's a very clear signal. That's not a chart I like to invest in. And what this also tells us, what's happening today with this sell-off, is this is Newmont. So this is, the retail investors don't have the power to move a Newmont stock 6%. This is big institutional money. This is hedge funds. And basically what they are saying is, this is probably kind of as good as it gets as far as the earning report. Now, this next quarter will be great because we had a significant rise in gold prices, and Newmont realized a great average gold price in the past quarter, so I assume they will do even better. I think it was like $3,545 an ounce, way higher than I anticipated they would be able to do. So good job there by management, absolutely, right? Absolutely great job. But that might be the peak of it. That's basically what this candle is telling us. A lot of people are selling and saying, you know what, we had a great run, and no doubt did you have a great run with Newmont, with the stock. I mean, that's fine, but it's nothing special. But because it's nothing special, a double in 2025, that's a lot of money, right? That's a lot of performance. So Some institutions are clearly selling because that is the only reason why this share, the stock price is down 6%, and that's what we have to take away from it. We might be, and I've said this before, talking about the gold price, but now we're talking about the gold mining companies. And if we keep seeing this, and this is what I want for you to pay attention to now with the next results that are coming out. If we keep seeing this phenomenon as well with the likes of Barrick, with the likes of Kinross or Agnico Eagle or Alamos, right? Like Alamos or Agnico Eagle are expensive mining stocks compared to Kinross. If they keep selling off, then this story, the signal that we learn is, all right, this was it's as good as it gets right now, peak. And the institutions, or a lot of them, are taking their money and leaving. And what does that mean for us? Let's not rush into the mining stocks too fast right now. We're probably gonna get cheaper prices. And when that happens, I want to get back into the mining stocks, but then focus on the mining stocks that are either top tier Agnico Eagle, Alamos Gold, that have growth. What separates Agnico Eagle and Alamos Gold is they basically have the growth of like a junior, but the profitability of a senior producer. We want to either invest in these excellent companies or in developers and explorers that have great stories that should have them profit from the gold bull market that is intact. Don't freak out about gold not looking great. And this is not a great candle that we're seeing here on the weekly again, right? We see high two long wicks in a row. We see a red candle now. Yes, the uptrend is holding, and I told you, as long as we don't break the uptrend in gold, everything is fine. So let's keep watching the uptrend. But if we correct to 4,000 or they push it down to 3,500 area per ounce, 20% correction about, that would be a great buying opportunity. But then we want to choose the real gems. I believe gold is going to go to 8,000 to 10,000 in this bull run of gold. And that means if we get the right mining stocks, we're going to make a lot higher returns than that. That's it for today. Have a great weekend. We speak at the beginning of next week. Enjoy your weekend. We all deserve it. Arizona State playing this weekend, Houston. We need this W. Go Sun Devils. Bye-bye.